Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Thursday, 7th day of February 2019, and this is the daily report for gold and silver. We have a mixed bag in the precious metals complex, with both gold and platinum trading lower on the day and silver and palladium trading higher on the day. Interesting mix going on in the marketplace. There is a discrepancy between spot gold and gold futures, and we'll talk about that as we pull up our technical studies, because as you can see on the board, we have April futures closing off by about 90 cents today, currently bid at $1,313.50, and at the same time, we have spot gold actually bid up by about $4 on the day. This is the second time I have seen this occurrence over the last week and a half, and it is absolutely noteworthy. I'm not convinced I know what that is saying, but it could possibly be indicating that gold pricing will end this shallow correction here and begin to move higher. And what we're seeing in spot gold is a precursor to a move in futures. We'll have to see how that pans out. Silver is trading higher on the day, though. That's up almost 0.2%. Currently bid at $15.73, and that's a small gain, but a gain of about 3 cents on the day. Platinum is taking it on the chin, just at $800 per ounce, down $13.50 at $800.30. And palladium continues to be a runaway freight train, up almost $9, $8.90 at $13.60.50. Incredible move that we're witnessing. And that is all in light of a moderately higher US dollar, but it's not so much that the dollar is up about 0.2% or 16-point gains. It is the fact that throughout this last week, in fact, over the last 6 to 7 trading days, we have seen consistent gains in the dollar, and the dollar has really come up off of these lows here at about 94.90 and is currently trading at 96.32. Big sell-off in U.S. equities today. 220-point drop in the Dow, although well off the lows this morning. It is down to 25,169. Standard & Poor's, this is basis the E-mini. That's down almost a full percent at 2704. And lastly, the composite is down by well over a percent 0.17 at 72.89. So traders, as I said at the beginning of the show, one of the interesting facets in trading today is the differential in terms of price change between spot or physical gold and gold futures. We are looking at a daily candlestick chart, and this candlestick chart is of spot gold. We can see that it is currently trading at $1309.99. More importantly, we can see that the net change on the day is about $3.69. That is interesting in that we had our gold futures actually close nominally lower on the day, and we're seeing a much more robust gain instead of a smaller fractional sell-off in spot gold relative to gold futures. As I said, there's no doubt that is an interesting facet of trading, and we'll have to see if that is a precursor indicating that gold prices are in fact bottoming at this point, and we will begin to track higher. And traders, we are looking at April futures. April futures currently trading at $13.70, putting it down about 70 cents on the day. And we have some mixed messages really going on when we look at today's activity on our daily chart, which is this single candlestick here. And that is, first of all, what I find extremely noteworthy is the fact that the low achieved today, which came in at around 1306, was quickly bid back up as this market closed above where it opened. That's why we're getting a green candle. And interestingly enough, closed back above 1312.50. That is the 0.23% retracement point. And to me, that might be indicating that we're seeing some sort of bottom activity in this marketplace. However, at the same time, we must note on a technical basis that we did get a lower high today as well as a lower low. And that has been fairly consistent since this market last week hit the apex here at 1330 and began to track lower. So it's going to take a little bit more convincing, at least as far as I'm concerned, that we have in fact bottomed and we are looking at higher pricing, because we could easily, I believe, go to about 1300. 1300 is a key level. It is the 0.23% retracement of this last rally, starting at 1200, going to 1330, and that's a pretty sizable rally, $130 rally. So the fact that we would see it only retrace a small amount, meaning just a little bit over 0.23%, doesn't tell me that we have ended our correction. At the same time, I am not looking for a deep retracement, and this is something that we covered on yesterday's show. I think that the deepest we would see would be about 1280, and that is the 0.38% retracement of this last rally, because the way that I am looking at it is if we go from the end of August, and that's when this market bottomed, and we really got our first rally, and that rally was interesting because what we got was a tremendous price spike, and then we formed a new base for quite some time, really all the way through the end of August, all through September, into the first couple of weeks of October, and then the spike to a new level in which it then based again, meaning it stayed at about the same price before we saw a pretty deep correction. And if we look at the price move up and we analyze the correction, this is a fairly deep correction here. And as we talked about with Elliott Wave, typically on a 5-wave count, wave 1, wave 2, wave 3, this is our wave 4, and then we'll get a final 5th wave. Typically, one will be a deep correction and one will be a shallow correction. That's typically, that isn't how it always occurs. So the fact that we got a pretty deep correction here tells me we might be looking at a fairly shallow correction here. And that would mean that it might be time once again to re-enter the market. And as we look at the market right now, it's only down about 40 cents. The high today was 1580, which was actually in the positive. So let's see how this plays out tomorrow. And then we might have an opportunity at the beginning of next week to enter the market from the long side and see this market go past these most recent highs at 1330. This has been Gary Wagner, wishing you, as always, good trading, and we will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.